It's about that time of day again. My name is Joseph. Wednesday evening, September 12th. Welcome back to your nightly newsletter. My job is to help new traders earn consistent profits using a simple and reliable trading strategy. And my plan this evening is to identify the most reliable trading opportunities setting up for tomorrow's trading session. And tonight, I'm covering crude oil, S&P, Nasdaq, gold, and euro. Starting off this evening with crude oil. Oil is bullish with a triangle pattern tonight, so I'm looking for buying opportunities using a seller failure pattern below the range tomorrow morning. The S&P is also range bound with a bull bias tonight as well, so I'm looking to do the same thing, looking to buy those lows using seller failures and the two-try rule on the S&P. The Nasdaq is range bound, much more balanced on the Nasdaq though. Get a triangle pattern in the NQ tonight, and that tells me to focus on failures for the most reliable opportunities tomorrow. Don't forget about gold. Gold is bullish with a strong spike in channel higher today, and that tells me to look for buying opportunities using a two-legged pullback, and I've got my eyes on a key reversal line on the gold tomorrow morning. And then, of course, last but not least tonight, we'll grab the euro. The euro is range bound and trading at the high of the range tonight, so I'm looking to short this market back down to the lows using a hidden channel for Thursday morning. But we'll get a great newsletter in store for you guys and gals. We got some contract rollover to talk about here tonight. We got some ranges on the chart tonight. Got a nice big strong trends to work with on a few markets here for tomorrow as well. So we got a lot to cover here tonight. I got a great plan of attack for Thursday's session. Before we jump in though and put the plan together for Thursday's morning session, I want to remind you, if you're watching me here tonight on YouTube, don't forget you can find a detailed description written out of this entire trading strategy. That's right. If you look below the video tonight, you'll find all the text, right? All the text from tonight's video. That way you can read all the description of the strategy for tomorrow. Also, if you have any questions about anything covered in tonight's video, please remember to post those questions in the comment section below. And if you like what you see, please help support this channel by subscribing, and don't forget to hit the bell icon so you get notified every time I post another video. Oh, and one more thing, if you really want to stay in tune with everything we do here at School of Trade, head over here to the blog at sidewaysmarkets.com. I'll link it up in the description of the video tonight. And while you're here, don't forget, join our mailing list. Upper left-hand corner, all I need is your name and your email address, and I'll send you an email every time I publish something new. If you're hanging out on social media, StockTwits, Twitter, Facebook, LinkedIn, whatever your favorite flavor of choice, I put content on my social media channels you won't find anywhere else on the interweb, so follow me in the lower left-hand corner. And then how about some charts from tonight's video? How easy is this? All the charts that are in tonight's video, you can have those ready on your computer, right? Either use them tomorrow morning with me in my trade room, right? Or on your own, grab those charts below the video tonight on our blog. And then in the upper right-hand corner, if you're not a member here at School of Trade and you'd like to grab a free pass to attend our trade room, you can grab that free pass in the upper right-hand corner. And don't forget, if you have any questions, hit me up on live support, right? Get a toll-free number on the homepage of the website. You can drop me comments in the comment section below, right? And don't forget, I've always got live support there as well if you have any questions along the way. All right, always great to be here with you guys and gals each evening. We got a lot to cover here for tomorrow's session. Let's jump into the calendar and let's see what we have on the calendar for tomorrow. Tomorrow's Thursday, September the 13th. Yeah, one day off from the old lucky Friday the 13th. Nothing for tomorrow, though, as far as bad luck. We should have a pretty good day tomorrow. Pretty good day tomorrow setting up. We got the inflation number here at 8:30. And, of course, jobless claims, right, following suit. That's pretty much the only major news we have on the calendar here for tomorrow. As I mentioned last night, it's a lot of inflation numbers here as we finish up the week here this week. CPI, right, those consumer prices. Whenever I think inflation, I'm thinking euro, I'm thinking gold, so keep your eyes open on those tomorrow. I don't expect the jobless claims to have too big of an impact, but I definitely do expect to see that CPI number, right, have an impact tomorrow morning, so we'll be keeping our eyes open tomorrow. Gold, right, euro, you saw how, right, big those moves were today, right, off that news. So we're expecting to see more volatility because of that news tomorrow morning. It's also important to remind you guys as well, you're probably getting emails from your brokers. We do have contract rollover. Contract rollover, I believe, is scheduled for tomorrow on the E-minis. And then, of course, later on this week on the euro or the currency futures. And then next week, it'll be for crude oil, usually around the 18th of the month for oil. So just a heads up, you get contract rollover. Most likely, we're going to start seeing that either tomorrow or Friday. It's always tough to tell, the day before, because your broker will tell you tomorrow is the rollover day, but we're going to trade whatever market has the most amount of volume, right? So as you're watching rollover, for example, right now we're trading on the ES 0918 contract. The next front month will be the ES 1218 contract. Tomorrow, and this goes for the Nasdaq as well as the euro as well, we'll be trading the 918 contract until there's more volume on that 1218. Right? So don't just blindly roll over to the 1218 contract. This is not expiration we're talking about. We're talking about rollover, and professional traders, day traders, will roll over when the volume rolls over, right? Don't worry too much about it. You really can't mess this up. There's no penalty if you trade the wrong contract month. Again, this is not expiration. The 918 won't expire until almost the last day of the month. So we're ahead of expiration. We're just talking about when the volume rolls from the 918 to the 1218. And the best way to do that is look at the total volume count tomorrow morning. We'll do that together tomorrow in our trade room. I would imagine tomorrow probably going to be the 918 contract, but be aware, we're waiting on that rollover, and the rollover, of course, will be whenever the volume rolls from that 918 to the 1218. If you want more details, if you want more instruction on that, you know where to reach me. I'm always in my trade room Monday through Friday, opening up every morning at 8 o'clock Eastern time, and we can do it together. All right, let's jump right in. We got crude oil, S&P, Nasdaq, gold, and of course we can't forget about that mighty euro tonight. Starting up tonight on oil. Oil is bullish with a trading range and really a measured move in the chart tonight. It's not a lot on this chart to worry about tonight. The range has a bull bias. We can see this market running hot here. Again, we were expecting to see some bullishness out of the market here this week because of the hurricane right here in the U.S. That strong run higher, That strong run higher. Now we're seeing, of course, lower highs, higher lows. This is a bull bias to a trading range. And anytime we see a bull market then start going sideways, whether it be a true range or whether it be a triangle, we now start looking for what we call the two-try rule, That's the one try, that's the two try, and the back up in, One try for the bears, two try for the bears, and then we're looking for those, buyers, to attack that second try failure. The other option on this is to use what we call a breakout pullback. Now, breakout pullback in this situation, let's draw this out again here. If this is my range and I'm running into that range, And again, I'm drawing it as a range. It could be a triangle here as well, It really doesn't matter much to me. It's usually going to be, though, ranging, one try, two try, and then we look for that strong breakout pull back, And what I'm looking for here is I'm looking for, first of all, I want that one try, two try below that range low, and then look to buy back up. Or let's get that moving average up above the top of that range, See how I'm drawing this up right now? Make sure that moving average is above that range here. That way we know that this break higher was strong enough, See, it's important that we get a strong enough breakout. How strong? Strong enough to allow us to get that moving average above that range. Then I'm looking for a two-legged pullback. One leg, two leg. The reason why I like a two-legged pullback is because what it does is it gets the sellers thinking we're going back into that range. And we know where their stops are, Their stops will be right up here. So we're looking to buy into those stops, as the market explodes higher. I never try to predict this breakout here. If you have any experience in trading, you know that breakouts are not the most reliable thing in the world, They're very unreliable. So we look for that one try, two try. That will get the bears interested. And then, of course, we'll look for those buyers come in and run them out of town. So looking for those buy opportunities here, guys, below the low of the range, the two-try rule, and, of course, that breakout pullback pattern up through that range here. So as you can see, here's the range, There's my lower highs and my higher lows. And ultimately right now, with all this bullish going on, we're looking for this one try, two try, back up in, right? And really, for the most part, the pattern usually looks like this, right? Where we'll go one try, two try, back up in, and then pull back off of that moving average, right? So it's the one try, two try, that two try rule. And then watch as it goes higher, because you can oftentimes find a new channel off that new high, and we can buy right into that pullback as well. So this ends up being basically a failure pattern, right? Two try failure into, again, you're not going to want to buy the break higher, right? But you can buy that pullback, right, as we go lower. Now, what would it look like to the upside here? Well, to the upside, this is where things get interesting, because I don't want, because of the bullish bias here, I don't want to use the same technique, right? So one try, two try, failure. You're not going to want to sell off of that high by just using a buyer failure. Why? Because the market's too bullish. You're going to get run over and lose money that way. What you want to really do is you want to wait for that one try, two try, wait for the run lower. And I'll show you this on the euro a little bit later on tonight. Wait for that move lower, then find that new channel down. You can usually incorporate that channel high along with that prior high, and I'll look for that sell, right, going back down in, right? It's gonna look a lot like this one, right? So we go up. You're not going to take that failure. This one worked, but you can't trust those, and you'll see why in the euro in a second, right? Don't take the failure, but then draw that trend line down, right, off of that high, and then looking to sell it as it comes back down, right? This one's not obviously perfect, but they never really are, right? They're never really perfect, right? So we're going up, that becomes a failure, right? And then back down we go. We wait for the proof to see the market collapse, and we sell that pullback back down, right? So one try, two try, I'm not going to sell that yet, but once I see it run, then I can get short, right, off that pullback. That's the plan as we go back to those highs. Now, if we can get this market really running here, right, if we can get a nice strong breakout, get this moving average up, well, hey, then we can look for, right, that buy as we're going up to finish off that measured move. Just be very careful, though, buying up here. Be very careful buying up here. Again, we get that prior week high just overhead. I'm going to really be hesitant to buy a pullback like right here, right, because you're going to want to make sure you see that, right, get that clarity through it, then find that new channel, then we can look at buying. Once we see that proof that buyers really want to send this thing higher. Oftentimes, we've had two back-to-back days of really big runs here on crude, right? If we do go sideways here tomorrow, you know, if we sit sideways for a few minutes, for a few hours tomorrow, you know, let's just say, for example, it's 9:30, it's 10 o'clock tomorrow morning, and we're still going sideways. At that point, we're probably going to lose any bullish momentum. So if we get to that latter half of the morning tomorrow, right, it's one try, two try back in, one try, two try back in. But again, that will only be until we, right, really see this thing really go range bound here tomorrow morning. So the easy money right now in my book is a one try, two try failure, being the buyer back in, right? One try, two try, not the failure, but in the pullback, right, back into that range, or the explosive move higher, find that new channel, get that moving average up, right, and then look for that buy on the pullback to finish off that move. If it sits sideways, stay patient with it, right? Don't force it, and we'll wait for those breakouts to fade those breakouts tomorrow morning. So crude oil looking great. How about some S&P? S&P is also bullish with a triangle and a measured move on the chart this evening. Again, not a lot on this chart to work with, but plenty to put together a good strategy for tomorrow. The range has a bull bias to it. That tells me to look for buying opportunities using seller failures below the range low, while the measured move will definitely make for an excellent target if these bulls can get a successful breakout pullback to new highs tomorrow morning. Most important thing right now is get a bull run higher today, right? We talked about that deep pullback, right? That failure, and back up we go, right? As they go back up, though, they double top. And anytime we see a double top in a bull market, we know the market is now in a range. So we can mark up that high, mark up that low. The range might be a little bit narrower, something like that. That might be the range. It doesn't really matter, to be honest with you. We've got a bull market going sideways, whatever you want to call it, whether you want to call it a range or you want to call it a triangle, it's completely up to you. The bottom line, though, is we know the plan, right, on this. And again, keep in mind, this is the 918 contract, right, on the S&P. Tomorrow morning, before we begin in the trade room, we'll check the volume tomorrow, and we'll see if we can get that 1218 contract on our radar tomorrow. And again, if there's more volume tomorrow on the 1218, we'll use the 1218 as well. So the plan's pretty simple, right? We want to get that one try, two try, and then back down. It'll look very similar to this, right? One try, two try, back up. So pretty similar we're looking for in today's session. One try, two try, back up we go. And again, trying to sell off the high. Be careful, right? One try, two try. I'm not going to sell off that high, but I will look for the two try rule. Then we can drop it back in. Don't chase after it, right? Find that new channel, and then we'll try to sell up around the high of that channel, right? That will make it a whole lot easier for us rather than trying to pick a top in a bull market, right? That's always really difficult because what happens a lot of times is that when you have a bull market with a range, right, you'll get that strong break up, and you'll see this in a second on the euro, right? A strong break up. You'll see the pullback here. If you try to sell below that low, oftentimes there are buyers waiting right there to buy that trap, right? To buy low. And that's why you got to be really careful trying to be a seller in a bull market that's going range bound. Obviously, we want to stay away from the middle here, right? One try, two try, buy back up, right? Again, one try, two try. I'm not going to sell off the high, right? I'll grab that pullback as we run back down. And then what do we need for a breakout? Breakouts are relatively easy. If we can see a break higher, get that moving average above that high, then we can start looking for, right, that two-legged pullback, and we can look for that buying opportunity up to that measured move at 29.07 half, right? So pretty big target up there for the bulls. Nice big carrot at the end of the stick there for those bulls. How do we turn bearish? What would a bear market look like tomorrow? Well, imagine if this moved down. Imagine if they would have held that pullback and gone. That's what we need to see tomorrow. This is a great example how when the market is bullish like that, it takes more than just a strong move against the trend to get the market to reverse. They have to actually hold that pullback and run, right? What do we call that? We call that the 1, 2, 3 reversal. And remember, right, there is an exclamation point, right, at the end of that statement. What I mean by that is there needs to be an exclamation. There needs to be some sort of jump off of that low, right? So as we go lower, 1, 2, 3, and this could really be anywhere, really, right? But I want to see it strong move down, pull back, strong move off, right? That gives me confidence now that A, the buyers have walked away, and B, the sellers now are going to have enough momentum to be able to give me another leg lower. So now what I'll do is I'll draw out my new channel. I'll find those channel highs, right? And then we look for that sell, right, off of that channel. And usually what happens is you'll usually get something like this, a sell off the channel, and then a jump up, failure, and retest that low, right? As the moving average comes down, it kind of hooks like that, right? So we're looking to sell off that channel, right? And then again, it's the one try, two try. It's a failure pattern, right, to sell off that high. Right, so again, relatively simple plan there. Just got to wait for it. 1, 2, 3, off the moving average. Find that new channel. We're selling off the high of that channel, and then again, if it kicks back, it's that failure. Back down we go. And from there, it's pretty easy to tell where they're hunting for at that point. Right, they're going to be hunting for that 28.67 and a quarter. Right, that'll be their target if we can get that 1, 2, 3. right? Grab it on the way down. So buyers are trying to get up to that measured move. Sellers are trying to get down to that 28.67. No matter whether you're a buyer or a seller, we're watching that rollover for tomorrow, right? We're watching rollover tomorrow because we know, right, we're on the edge of rollover, so keep an eye on that. And again, if we sit quietly here, we started off the session this morning pretty quiet, right? Be aware, this week we've seen a lot of this kind of sluggishness between 8 o'clock and 9 o'clock. And then after 9:30, we've seen some great movement. So just stay patient, wait for your trade. As I always tell my clients in the trade room, we're going to get a couple good, pitches to hit today. It's just a matter of waiting for them. This week's been a good example of how you really got to be patient, right, to wait for the best setups. Speaking of the best setups, here for the Nasdaq here. How's the Nasdaq doing? No, Nasdaq was a mess today. Nasdaq is range bound with a triangle and a pair of measured moves on the chart this evening. The triangle or the range, right, as you can see here, it's relatively balanced. There really isn't much of a bias. There's a bull bias from yesterday, a bear bias from today. So it's pretty much a balanced range. It's a very different looking range than we saw in the S&P, which is a clear bull bias to it. So we're buying the S&P, but really we're kind of free here on both sides of this market right now, right, to buy low and sell high. I want to fade the breakouts using the 2-try rule, right, and those measured moves will act as support and resistance. Now remember, anytime we see a triangle, as I draw this up off the low, right, down off the high, up off the low, anytime we see a triangle, you know your biggest resource are these swings, right? Anytime you see a triangle, you know the swings are always going to be where the action happens, right? So stay away from the middle. Okay, that's the chop zone, the no trade zone. Mama always reminded me not to fiddle with the middle, right? We want to stay out of that middle. And again, the plan is pretty simple here, right? It's pretty much the same plan we talked about earlier on the S&P, right? I want to buy the low. I want to sell the high. I want to sell the high with the 1-try, 2-try, 1-try, 2-try back down. I want to buy that low, 1-try, 2-try back up, right? So as we go, right, as we go lower, right, as we go lower, it's 1-try, it's 2-try, it's back up, right? As we go higher, let those buyers try to buy the pullback to the moving average, 1-try, 2-try. Now I know where those, right? Now I know where those stop losses are, right? And I can sell off those, right, into those stops as well, right? So 1-try, 2-try, and then buy off those lows, sell off those highs. And if you want to see a lot more examples, right, of these 2-try rules, how we use ranges, what I'll do is I'll drop a link here to my free trading course in the upper right-hand corner. I want to show you a lot more examples of these 2-try rules because we use them in so many ways. The 2-try rule can be used in trending markets. It can be used in range-bound markets. It's really a great tool. So if you want to see more examples of, real examples of the 2-try rule, how we use this 2-try rule in our trading, right, in our trading room, right, 1-try, 2-try, back down in. Again, grab that free course in the upper right-hand corner. You'll see the information icon up there, right, and it's also linked up in the description here tonight, right, on the video. So grab the description, grab that link, join the free trading class, and of course you can see literally hundreds of examples of these 2-try rules, right, breakout pullbacks, stuff like that. All right, let's keep going. So Nasdaq is relatively easy, right, 1-try, 2-try. How do we break out of this range? What does a breakout look like? 1, 2, 3 breakout, right? 1, 2, 3 breakout, right? How do we break out of this range? 1, 2, 3 breakout. I want to see a 1 strong move up, 2 pull back to the moving average, 3 break higher here, right? Think about 1, 2, 3 breakout, right? Remember, the key is that breakout needs to happen on strength. So first leg higher, right? We're not quite there yet. Pull back to the moving average. Remember, if they fail on that breakout, we're selling this back into that range. Right? Same thing goes for here. 1, 2, 3, right? They've got to get that third leg, right? That third or second leg, right? That third breakout, right? That strong breakdown, because just a strong move lower is not enough to turn this trend, right? They got to hold it. If they don't, we're going to buy it right back up into that range. Now, how do we trade it? 1, 2, 3, right? 1, 2, 3 breakout. Then what do we use? Yep, find that new channel, mark off that high, and we're looking for that, right? Looking for that sell off of that high. Same strategy we talked about, right, on the S&P. This one, of course, is pretty much both sides, right? Buyers and sellers can do some damage on this trade. And again, if you want to see more examples of the 1, 2, 3 breakout, the 2 try rules, make sure you grab that free trading course linked up in the description or in the upper right hand corner. So Nasdaq looking good. Again, watch the Nasdaq tomorrow for those rollover clues tomorrow. And again, don't be bashful. If you need help with rollover, come join me tomorrow morning in the trade room. How about some gold tonight? Gold is bullish with a strong run higher, a spike in channel, reversal line, and a hidden channel on the chart this evening. The strong run higher is the big clue in my book. That tells me that any pullback is going to be seen as a buying opportunity, right? Strong run higher. Any pullback here will likely be seen, right, as a buying opportunity to go back up and retest that high. The spike in channel pattern, which I've got drawn up here, this spike in channel pattern, right? That spike in channel pattern is a huge clue. Spike in channel patterns tell me to look for a deep pullback, almost as if to allow buyers to kind of catch up with, right, what's happening right now. So I'm watching for a pullback. I can rely on this bullish momentum. If the market pulls back, I can rely on it to go back and retest that high. So I'm looking for a buy at the support levels below. Where can I find some support levels? There's a couple of them here. First of all, you've got a gorgeous potential hidden channel here off those highs, off that low. If we do happen to see this thing really collapse, right, that'll be a great spot to look for a buy off support. But in the short term, though, I really like this 1209.7, right? This is a prior resistance level that has not been used as a level of support. Right? Anytime I see a prior resistance level that's still untested like that, it's very rare for markets to trend that strong without pulling back, right? To at least kind of tap, right, that level of support. So levels of support. In all reality, this whole area down here is really where we're looking for that pullback to get down to support levels here. So strong move up. I want to buy a pullback. And if price pulls back into that battle zone for me, anticipate this. What's going to happen? We're going to be below that moving average. When we pull below the moving average, what's going to happen here? Bears are going to come in. They're going to try to sell off that moving average, right? The momentum, though, is not on their side. The momentum right now is bullish, right? So anyone trying to sell that pullback is technically on the wrong side of the market, right? The odds are not on their side. The odds are on my side, the buyer here. So what I'll do is I'll just wait for them to fail. I'll just wait patiently, wait for a nice strong signal, right? And then once I see that failure, I can jump all over this thing, right, and buy into their stop losses. One of my favorite ways to trade, right? We saw a good example of it right here, right? This is from last night's newsletter. Pulled back. Bears try to sell at the moving average, right? They fail, right? And we break higher. Okay, like I mentioned, we don't want to chase after it, right? Find that new channel, right? And look to buy that pullback, right? If you want to take the failure. Okay, so relatively easy idea, right? We pull back, we're below the moving average. Bears come over, they try to sell the moving average test. We know where their stops are. We can then look for those stops to get run, right? That's your first opportunity. And again, you can take, remember, if the market's bullish, I'm looking for seller failures. If the market's bearish, I'm looking for buyer failures. Okay, I wouldn't take a seller failure, right, in a bear market. I would take a buyer failure. So when we look at those ranges, we don't want to take range breakout failures going against that trend, right? That's the stuff we've been talking about so far today. So I can look for these failures as long as I'm going with the trend, right? Go with that trend, look for those failures, then grab that, right? Grab that new high, find that low, and again, I'm looking for that pullback, right, to buy off that low. Again, we call this a 2-try failure, right, into a breakout pullback using a hidden channel. And again, if you want to see literally hundreds of examples of these breakout failures, these 2-try failures, right, breakout pullbacks, right, how to draw channels, how to find ranges, right, how to draw these hidden channels, it's all covered in that free trading class in the upper right-hand corner. And again, right below the video tonight, right in the description. So grab that. Now that's if we get the pullback, right? Price pulls back, 1 try, 2 try, right? Back up we go. What if we go sideways here? Right? What if we end up going sideways, right? What if we pull back, we run higher, we see a double top, right? Now what's the plan? we get a bull market, so we want to buy low, and we want to use the 2-try rule with seller failures, right? So 1 try, 2 try, right? Look for that 2-try rule, and then we're going back up to retest the high. And again, there are so many ways that we can use this 2-try rule. It's not just for trends, it's also for ranges, right? And there's so many ways that we use the 2-try rule. Again, it's all covered in that free class, right? Linked up in the description. So that's the plan if we go lower, right? If we can push through that, again, right? We're looking for that 2-legged pullback, get that moving average up, and that becomes the next, right, potential buy from there, right? Now, what if we keep going higher here, right? What if we keep running higher here? What if we keep going higher, right? We keep going higher. We keep going higher, we're still in the same situation. We still have a very strong trend, and we're still waiting for that pullback, failure, strength, and go, right? So even if we do keep going higher here right now, right, even if we don't pull back, keep going higher, fine by me. I'm still waiting for that pullback, that failure, right, and that run. Okay, nothing changes. We just have to kind of delay, getting in on that entry pattern. So relatively simple idea there on the gold. Again, would love to get a pullback. If it keeps going higher, though, we'll watch for the pullback later on in the session. And if it goes sideways, we'll look to use that range, right, 2-try rule, right, to fade those breakouts. Let's wrap it up tonight here on the euro. The euro is looking great here for a short, right? Euro is range bound with a range and a 2-try rule on the chart this evening. Now, as discussed in last night's newsletter, if you recall, right, we had that range in last night's newsletter. So the plan today was to fade the breakouts, right? Go down, fade the breakouts. Never got a very deep pullback there, but now we went up 1 try. Now here's a great example of why you've got to look at 2 things here, right? First of all, as we mentioned last night, there was a bull bias going into this range, right? So we don't want to take that failure, because look what happened, right? When you zoom in on this. This is what happens when, 2 things. 1, it's a bull bias into that, right, into that range. And 2, the strength of this move higher. Anytime I see a real strong move like this, I've got to really be careful trying to take that failure, because that momentum is so strong, right? So not only do we have a bullish bias to it, but again, right, we've got that real strong bull move here. So as you can see, we pull back. We see the buyers come in at the moving average. And again, if this was a typical sideways range without a bull bias, or if we didn't have such a strong run, that's a real strong run. That strong run means trying to sell that failure. Look what happened. Buyers just blasting it higher. So it's not an easy sell. The bulls have too much momentum. This is a great example of why I said on, for example, like the gold or the S&P that have these bullish biases to them. You want to wait here now. Wait for this to run, then grab that channel off that low. Again, you're drawing the channel off these 2 new lows, and then we now know where that resistance is, and I can sell off of that resistance. So that's basically what we're looking for here, right? Look for a strong push lower, then look for selling opportunities off the high of that hidden channel here for tomorrow morning, right? So 1 try, 2 try, wait for it to turn, find that new channel, draw off that channel, and we're looking to sell right off that channel high. Now, you might also be asking, could this be setting up for a breakout? Absolutely, because you can see it's a very strong run higher. That strong run higher now, I'm looking for that next leg higher. If they get that next leg, this is good as broken out. We'll find that new channel. We'll mark up those highs, and we're looking to buy on that pullback. Right? So that's the plan if we go higher here. If we collapse back into that range, stay away from that middle, right? Stay away from that middle. We look for that 1 try, 2 try, breakout, pullback, and go from there, right? So that's our plan coming off of that low. So a lot of the same stuff here, right? A lot of the same stuff. We got a lot of these ranges going into tomorrow. The euro, the S&P, the Nasdaq are all kind of suffering from a little bit of rollover right now. So we got that coming right around the corner here. If not tomorrow, it'll be on Friday. And of course, we got some strong trends, right? Gold's nice strong trend here tonight. Crude oil, nice strong. Gold's the only strong trend. Crude oil had a strong trend, but now going range bound. Guys, don't forget, we got the whole plan outlined here for us for tomorrow, right? Come out and see me. Let's trade the strategy together. Let's do this together tomorrow. I've covered a lot of information tonight on this nightly newsletter. If you want a much deeper dive into the entire strategy we use here at School of Trade, I get a great free trial right on the homepage of our website. I'll put all the links in the description of the YouTube video. And then don't forget, whether you're brand new as a new trader or you're a grizzled veteran looking for a great trade room to keep you on track with highly reliable strategies on all the different markets, we have beginner, intermediate, and advanced classes. Don't forget, you can always hit me up on live support on the right-hand side of the website. And as always, right, hit that toll-free number and we'll answer the call here in the office here in Los Angeles. Guys and gals, thank you so much for being here. Tomorrow, watch the rollover, watch those ranges, and be there tomorrow with me, 8 o'clock Eastern time. If not, we'll see you guys back here, same time, same place, tomorrow night on our next edition of our nightly newsletter. My name is Joseph. Be well out there. Be nice to each other, will you? And be here next time. Adios, amigos. Bye-bye for now.